And welcome out to the last day of the year, the last trading day of the year, and the last time we're going to do our halftime report in 2018. But it's good to be here. Welcome, 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 Matt. Happy early New Year. I know we still got today, but how you doing today, brother?
Doing good. Excited to be here with everybody for the last halftime report of 2018. And our first halftime report of 2019 will obviously be on Wednesday, as we will not be here tomorrow, as most people will not be. So looking forward to today. Obviously, not a lot happening in the market, just kind of a continuation of what was going on Friday.
So what is your typical routine for your New Year's? You and your family kind of hang out?
Well, I'm 41 with kids, and so my typical routine for the last 20 years has been about the same.
Yeah.
It's hanging out at home with the kids, inviting over, some friends and some family, maybe slow cook a roast, maybe do a little barbecue, maybe, but more likely some soups. Gonna make some soups and have a little party tonight. So I'll tell you how my night's gonna go. It's gonna be very, very simple. I'm gonna make some food, some dips. Right, I'm going to make some dips and some food. I'm going to play probably Game of Thrones edition of Catan tonight, and son wants me to play a little D&D, Dungeons and Dragons, and I've never played that in my life, so I might play that. Yeah, and then we'll ring in the New Year's at midnight, and I'll probably go back and go to bed at about 12:10.
Dude, if I'm not out and sleeping by 10, I would be shocked.
I say you're not making it midnight.
I'm not a late night owl guy. Mike, we're taking the kids over to grandma's for just a few minutes. They're going to play some card games. They like playing this game called Nines. They're going to hang out, eat some food. We're going to leave about 8, 9, and I'm going to be in bed by 10.
You're not making it.
C'est la vie. It is what it is. By the way, Dungeons and Dragons just made me think of one of our old students and an assistant coach back in the day when we first started tackle trading, Vic and Dean. They used to hold a regular Dungeons and Dragons game, I think even up to this point.
Yes. Of course he did. That is so Dean. That is 100% Dean. But no, I still remember mentoring Dean and Vic many years ago. Two great individuals. Love both of those two.
Yeah, fantastic. Are you going to be the dungeon master, or is Tanyan going to be the dungeon master?
No, Tanyan's already told me I'm the wizard. So
sounds good.
I'm just going to play my role, bro.
I mean, I think that's what the game is. It's an RPG for sure. I really don't know how you win that game, or even if do you win the game?
I don't know how you.
Are there winners and losers in Dungeons and Dragons, or are we all winners?
Yes,
right?
Everybody's a loser. That's it. Like embrace it.
I went for the positive. I went glass half full. You went glass half empty.
No. Embrace your inner geek. Tim, I literally just said on New Year's Eve, I'm going to play Game of Thrones Catan edition, and I'm going to play Dungeons and Dragons. So when I say we're all losers, yes, enjoy it. I'm a massive geek. I love gaming. I love those role-playing games. It's going to be fun.
Yeah, and we could chat all day about this. Last one, though. Isn't Game of Thrones coming back this year for their last season?
Yeah, after the 5-year hiatus, they're finally back.
They're finally back. That's going to be interesting. I think that's not till summer or whatnot, but I'm sure we'll talk about it.
Oh, I'm a big Game of Thrones fan. Love that show.
And welcome out, Halftime Crew. Hopefully you're going to have a safe and happy and enjoyable New Year's Eve. Make sure that you do that. Thanks for joining us while the market is open. Obviously, we got a full trading day here, Matt, and the market's not really doing much. It's very, very light volume today.
Wait. We have a full trading day. That doesn't mean anybody's doing anything today.
No.
I mean, there's a reason for the first 5 minutes you and I talked about Game of Thrones edition, Catan, and Dungeons and Dragons. There's just no economic activity today. Volume's going to be very, very light. And there's nothing you're going to be able to take away from today's price action, Tim. Even in some of those option trades from the options report and the stock report that are setting up as bearish retracements, I'm not looking to play them today. I'm waiting for Wednesday because I think the real opening of this week is on Wednesday.
Yeah, I'm going, and I'll say the same thing I did on Friday. I'm going into the weekend and now into the holiday, hedged and neutral and cash flow based in my portfolio. I'm going to wait for Wednesday for a lot of directional triggers. I was telling you this, Matt, and I want to get your take on it technically. To me, this is a perfect bear retracement setup. There's no doubt about it. But without confirmation, you're really guessing. And that's true of all technicals, by the way. Without confirmation, you're really guessing.
You're preparing. Right? I mean, you're preparing because, this is a typical standard bearish retracement in the market. And I want to talk just briefly about the bearish retracement because that's what every pattern is forming right now, whether we're looking at the S&P 500 or the Dow Jones or the Russell 2000 or the NASDAQ. Every one of these indexes are doing the exact same thing. The first thing that you're looking for in terms of a bearish retracement is, number one, a downtrend to begin with. A downtrend is defined by lower pivot lows and lower pivot highs, otherwise lower levels of support, lower levels of resistance. Obviously, we have a lower level of resistance and now a lower level of support, and now we're seeing a lower level of resistance. So that's point one. Point two is to assess the momentum of the trend. And the momentum of the trend is done by looking at the velocity of the motive waves versus the corrective waves. And when I say the motive wave, it's just motive wave down, corrective wave up. When you kind of look at the movements here, you see a very standard movement in the market. But then as the market breaks support, you see this momentum to the downside pick up. And when you're looking at this price movement from 2,800 all the way down to 23, we'll just give it kind of that 2320 barrier, you're looking at a 500-point movement to the downside, Tim. That is a massive movement in the marketplace, a massive movement. In any market condition, that is a big, big, big movement in one single momentum on the way down. So you have momentum to the downside. That's number two. So you obviously have a downtrend. You have momentum coming into the downtrend. Number three is you want to see a retracement happen. And what the retracement is, and there's a lot of different ways to equate to what a retracement is, but these are some of the minimum standards. You want to see at least 3 candles in the retracement. Typical retracements will go 3, 5, 7 type candles coming back up into that resistance level. So you want to have 3 to 7 candles coming back up into those overhead resistance levels. Now, how to assess resistance? That could be a downward moving average. It could be a previous level of old support is now new resistance. It could be a significant whole number. It could be a Fibonacci retracement number. There's a lot of ways to assess that. Well, looking at the market right now, you're at one of those levels right now. You're currently sitting on a very significant whole number in 2,500 on the S&P 500. So you're at what I would call 1 point of resistance here. You also have a point of resistance right here at the 20-day moving average. You have a point of resistance over here in your previous pivots from last January, February. So you're at 2 points of resistance kind of in that ballpark, with that third one coming down into that 20-day moving average. Another way to assess that Goldilocks retracement that we'd like to talk about, we're going to draw your favorite tool here, Tim, the good old-fashioned Fibonacci retracement level. And what you're looking at is a 38.2 Fibonacci retracement on the corrective wave, which is a very healthy retracement. I love Fibonacci retracements into that 38 to 50% zone, and that's where you're kind of approaching that level right now. So in terms of looking at this from a bearish retracement perspective, you're meeting many of the criteria that equate to a bearish retracement. There's only one key point you haven't met right now, and that is the ultimate confirmation. And confirmation is a close underneath the previous level, the previous low of the day. So today we're not going to get it unless we get some type of radical movement to the downside. So to have this retracement actually confirm for traders to really kind of say, okay, it's now for me to get back into it. Tim, you got to close today underneath this level right here at about 24.72. Now, could it do it? Absolutely. 20 points in this market condition is absolutely nothing. But to me, I just don't think we're going to get it today because of the light volume here. And that's another thing. I forgot this point. On the retracement, you want to see a reduction in volume versus the motive wave. And so that's, and I'm sorry for forgetting that point, but that's a very important point. As you can see, here is your motive wave to the downside. Look at the volume on the downside movement, Tim. Look at the volume on the retracement. In anybody's world, the volume on the retracement has been less than the volume on the sell-off. So that's another good point. And the reason I bring this up in such depth, Tim, is this is an excellent opportunity if we do confirm. And I'm not saying we're going to confirm on Wednesday, T. I mean, this thing could come up into the 20-day moving average. It could come all the way up into 2,600 and still be that retracement. Look at where this 61.8%. And this is one of the reasons why that retracement is so big, that zone between 2,500 and 2,600, is because you had such momentum to the downside that it created this massive range that this retracement could come up into. And so you have so many good signals here. The only thing we're kind of waiting on is confirmation.
I was looking at the $ T-vol, the New York Stock Exchange total volume, and really it indicates how light it has been the last 4 days. You've seen no volume coming into the market really during this retracement. And so that does signal all of those different areas. Matt, here we are at 38.2% on the Fibonacci. 50 and 61 could be in play. I guess this is inherently one of the reasons why I always rant about it. I mean, how do we know? We don't really know until confirmation, right?
Well, that's the thing. Rant all you want, but you don't know. It's a probability factor. But here's the thing. It could retrace into 38.2. It's slowing down coming into 38.2. And
Sure.
You also know 38.2 is right at 2,500, which is a major significant number. So could it be 38? Yes. Could it be 50? Yes. Could it be 61? Yes. But what I'm seeing right now at 38.2 at that 2,500 level is slowing momentum. And if we confirm, that has to be a trigger. That has to be a trigger. Now, maybe, you would want a better signal at that decreasing 20-day moving average, right where the 50% Fibonacci number is, which it would be the Goldilocks retracement. But the market's not going to give you what you want. You have to read what the market is willing to give. And right now you are seeing obvious slowing momentum over the last, even this candle here, Tim, look at this candle, look at this candle, look at that starting to roll over there. So yes, 38.2 doesn't have to be the retracement level, but given the fact that the market is obviously slowing down at that level, you can't just discount it.
Yeah, for sure. Top 5 gainers on the S&P here today: Netflix, CF Industries, AMD, Insight, and Best Buy. Some of these charts are more attractive than others, Matt, but I think if we run down like Netflix, it's not exactly a bullish chart until we break out of a new pivot high.
Netflix is on our bearish watch list for this week.
Yeah.
And I'll tell you, this is we've had this conversation before. Obviously, Netflix having a really, really good day today. That still doesn't change this trend, Tim. You're still in a bearish downtrend. You're still, we just talked about the Fibonacci numbers here. So let's draw the Fibonacci here. You're at, even with the 4% upward movement today, the 10 points up today, where are you at on your Fibonacci? You're right at that 50%. So give me a doji on Wednesday, give me a downward movement in price, and that's still shortable. You close under 260 on Wednesday, that's a shortable trigger. And so when you're looking at those scatter reports, we have to do a level of projecting entries based on what we see at the time. On something like Netflix today, well, yeah, you're not going to take a bearish trade on Netflix today. It never confirmed on the downside. But you give me a doji, give me a close under 260 coming in on Thursday, that's still a good trade. You have to be able as a trader to update those entry guidelines. Absolutely, 100%. But that's still a good trade. Now, to me, if Netflix goes above that 61.8 barrier, say on Wednesday or Thursday, this is no longer bearish to me. At that point, it would be neutral, and I'm no longer looking for a potential trade. So the Fibonacci can be very, very helpful in assessing, is this a retracement or is this something else? And if you get up above that 61.8, you have to start asking yourself that tough question: is this no longer a retracement, and are we back to neutrality?
Yeah. Netflix does have some indicator of slowing momentum. Obviously, we love the candle on Friday. It did not confirm here today, like you're talking about. Still bearish downtrend for me, until it changes, like you're talking about. And with the volume, there's not a lot of volume coming into this rally either. You look at that, you have less volume on this rally back up. It is what it is. AMD, actually one of the better performers here today as well, 2.6% to the upside. One of your favorite companies. We had a long debate about AMD over the weekend, Matt.
Well, we were finalizing our Tackle 25. And good news, halftime crew, Tackle 25 for 2019 is final. Not only do we have 25 stocks to put on the covered call list for the Tackle 25, but we also have 3 other lists. We have the Dirty Sexy Money list. Those are high growth potential covered call stocks. High growth also means what, though, T?
Oh, higher risk, obviously.
Higher volatility. Right? Higher volatility. You also have top 10 dividend fireworks, and you have the top 10 poor boys covered calls, which are calendar spreads, high dollar type stocks that we still like doing covered call on. And so AMD, we had a really, really long debate over AMD. It was something I wanted to put on the Tackle 25, but personally, I just couldn't pull the trigger because of it's just too volatile for most traders to really kind of manage that cover call. But AMD definitely made the dirty, sexy money list. It is the perfect dirty, sexy money cover call list.
And we're also building out that system, and AMD is a good example of the skill set you would need to be able to manage a covered call in a situation like this. If you went out and built a covered call, there could be good return in it, and it's a great covered call candidate for an advanced trader. But Matt, if it broke below 16, you have to know how to hedge and roll. I mean,
it's not even that, Tim. Yeah. It's if it breaks 20.
Yeah.
I mean, that's the problem with AMD and covered calls is it's awesome. You can get 5, 6, 7% without margin on AMD. I think right now AMD's paying out literally 5% on non-margin. Yeah. If I go to the trade tab here and just kind of look, 18-day contract AMD, you can get 76 cents. You're on an 18-day contract, you're still getting 3.5 to 4%. T. I mean, that's awesome for a covered call perspective. But the problem is if it breaks 16, what are you going to do? But also if it breaks out of 20, what are you going to do? And that becomes very, very nasty to manage. So it's not the initial, putting on AMD in a covered call. I love covered calls on AMD. But it's the management style of that. And so over the years, maybe it was AMD in 2017 and GoPro in 2015 and the VIPs in 2018. But over time, I've decided to try to remove some of those very high volatile stocks. And so that's one of the reasons why we decided to do a top 10 dirty, sexy money list, because we love these types of stocks like AMD to do covered calls on. But you just got to understand it takes a little deeper skill set than a lot of traders possess.
Yeah, there's no doubt about it. I do love the name, by the way. Dirty, sexy money.
Sexy. Everybody say it with me. Dirty, sexy money. That's our high growth list. We don't know if that's the final name for it, by the way. We just decided to do this recently, and so we were basically I think it was Tim. Tim's like, yeah, that's just dirty, sexy money. I'm like, okay. Okay.
Oh, goodness. Top 5 losers on the market today on the S&P: Chesapeake Energy, Dish Network, Perigo, Cabot Oil and Gas, and Ford Motor. Take a peek at Ford if you would. A lot of the automakers, Matt, they had a hard year, obviously. And it's a tough one, especially if you're moving into a bear cycle like we're seeing in the fourth quarter of this year. We're going to have our prediction podcast here in a couple hours, and we'll have our final calls for that on the Trading Justice podcast.
I still don't know what I'm going to do for the S&P, but I'll tell you, if Ford's on the prediction, I'm saying down.
Yeah, I get it. I mean, if you had to buy one automaker, Matt, which one would you play? I was looking at Tesla today.
Okay, so we got Ford, Tesla, GM. So we got Ford, GM,
Fiat, Tesla. Chrysler.
What's
FCAU.
FCAU.
Yep. And Tata Motors is a good one to look at.
Tata, is that just TATA?
TM.
TM? Mm-hmm. Oh, you're talking Toyota. Yeah.
No. No, that's Toyota Motor. Tata Motors is the Indian car maker.
Yeah, but what is their symbol? I don't know what their Tata
TTM. TTM. Mm-hmm.
Okay, so if I had to buy Tata, Ford, GM, Tesla, or Toyota, is that my car?
Yeah, you got to buy one car maker.
It's garbage. They're all garbage. But if I had to buy one, Ford's out, GM's out, Tesla's running a Ponzi scheme right now. Give me Toyota because I like their company better.
Toyota Motors would probably be the more stable one. Tata Motors, obviously the Indian car maker. The Indian markets have been.
They have, but you got slowing momentum here.
Yeah, Tata will perform the best if global growth comes back. And so those emerging market plays.
I literally almost said Tata just simply because of trend. It's down, it's obviously got hit because of the international trade wars and slowing growth in China and the Eurozone. That has a greater ability to snap back and have a massive rally.
There have been many days this year where I'm reading the top 5 gainers and losers, and some of those automakers are on the top 5 losers. GM has had a terrible year, Ford as well. They've not been good performers this year. We'll see if 2019 can revert that and maybe go the other direction. I don't know. Let's move on to the Dow, if you would. And out of the Dow components actually strengthening throughout the day here, we're starting to get a little bit more green on the day. We're up 0.8% on the Dow. It is leading the way across indexes. What's your read here?
Same read. No different.
Yeah.
The deep dive I did on the S&P is no different than any of these indexes, so I don't need to say anything.
Yeah. Goldman Sachs, Johnson & Johnson, Apple Computer, Microsoft, and Merck are making the rally on the Dow. And then Exxon, Chevron, 3M, Coca-Cola, and Walgreens are actually kind of all flat to down. Mostly up, though, here today. Kind of a flat day. Same thing for the overall market. Matt, there's the old theory about the dogs of the Dow, where the worst performers in one year, a lot of investors will come in and buy those stocks in January as investments for the next year. Dow Components, we're talking about major companies. That system does have some validity. Is that something that you put much weight on?
Stocks that have been depressed for 2018, I buy them because they're cheap. No, they're depressed for a reason.
Yeah.
If they reverse and give me a good pivot on a good company, absolutely.
Yeah.
But I'm not going to buy a dog of the Dow just simply because I'm 78 years old and I don't know what else to do.
Oh, c'est la vie. I get you. I'm with you too. I actually don't like the concept of just buying something because it was beaten up. The old theory, guys, is you find the worst performers on the Dow Jones and those become investment targets for the next year. I'm fine with the mindset of putting them on a watch list, but until you get confirmation, don't trade something just because it's down.
Stocks go down for a reason.
Yeah,
stocks go up for a reason. You trade momentum. You buy into strength. You sell into weakness. You don't buy into weakness and sell into strength.
I agree.
It's the opposite.
I agree. Let's look at the NASDAQ next. Obviously, Netflix, like we were talking about, is the top gainer on the NASDAQ as well. AMD right up there. Amazon actually having about a 2% day as well. Tesla down, Facebook down, JD.com down, Kraft Heinz down. The NASDAQ from a charting perspective is even uglier to me, but that might just be the visual of identifying how far it did drop during the sell-off. A little bit more beta sensitive.
It also has a better pivot point at 6,400 to 64. I'll get you the pivot zone really quick. 6,400 to 6,460, I would say, is that pivot zone. Man, 65. 6,400 to 6,500 is the pivot zone.
Mm-hmm. Yeah. Tech does not do well in bear markets, and there still is room down. You know, Matt, I was looking at all the different charts, trying to come up with my predictions for different sectors and whatnot. Technology still isn't looking strong. I mean, it may be the weaker of those areas. When markets go down, you tend to see these more sensitive type of companies drop like a rock.
Think about the IBD Top 50. The IBD Top 50 is one of the most widely followed growth lists out there. Okay. Mm-hmm. It's down on average 30% so far. Mm-hmm. 30% from the highs. The market's only down, what, about 18 right now?
Yeah.
From the highs, down like 7 on the year. Mm-hmm. No, the growth stocks, IBD Top 50, down on average 30%. In the 08 crisis, Tim, think about it. Market went down, what, 57% from top to bottom? Mm-hmm. Okay. IBD went down like 68% on average. Okay. There were multiple companies that went bankrupt on the IBD Top 50, got delisted. Almost every stock lost on the IBD Top 50. Every single stock lost. Average was 68%. The best performing stock on that list in 08 was like a 26% decline in price. Mm-hmm. Growth, tech get slaughtered in bear. They do great in bull runs, amazing in bull runs, but they get slaughtered in bear markets.
Yeah, for sure. And we've seen that even with the emerging markets and the small caps too. Move on to the RTY.
Same philosophy though. Emerging markets, small caps, high growth tech companies, biotech companies, all of them are based on growth potential. And so when the markets start to show a little skittish, what do we see with small and mid caps this year, Tim? Look what small and mid caps did for, since this volatility began really kind of in that October range. This market's been absolutely slaughtered. That's high growth. Small caps are high growth stocks.
Even that last move during the month of December from when it pivoted at 1550 all the way to 1250, just an incredible movement.
Nasty movement.
Yeah.
Just nasty.
Well, and me, I love the Condor system and I've been trading it ever since, but I also hedge on a day-by-day basis. If there's a couple of skill sets I want everybody out there to work on in 2019, number one, embrace the cover call. Okay. I think that's going to be a theme for us at Tackle Trading and the halftime crew and all that kind of stuff. Long-term growth. I love the comment you put in the clubhouse, Matt, where you said, listen, traders, they try to make too much money. Target 3 or 4% a month, 1 to 3% a month in conservative returns, things like that. And I love that, number one. And number two is hedging and trade management. You have to be able to control risk. There's no doubt about it. Love these different systems.
And I love cash flow condors, Tim, but I have not traded cash flow condors since I went bearish on the run in October.
Yeah.
You got to, there's nothing wrong with any system, Tim, and you're going to hedge it and you're going to hedge it. But if you're new to the market, I would stay away from condors.
Neutral cash flow strategies, if you don't know how to control them.
If you don't know how to roll, manage, and hedge,
yeah,
it's kind of like on a fire, duck, cover, and roll, right?
Right.
Yeah, you just.
But I'll make a point real quick on that, because think about it. That's like saying if you don't know how to use the brake, the gas pedal, and the steering wheel, you shouldn't drive. If you don't know how to do those things, you should.
But we all. Okay, how many people have you taught?
Oh, I think a couple.
How many people have I taught?
Thousands and thousands.
How many times do you need to tell people not to do something because they're not ready for it?
You should have heard me on the phone the other day. Okay. I was talking to a student, and I won't mention the details of it. We were having a good, fun conversation, kind of coming up with plans. And she's like, well, will you give me the go ahead and trade a condor? And I said, until you can show me that you're good at any of this, I'm not going to give you the go ahead and do anything.
No. First of all, it's not my job to give you the go ahead.
No.
Okay? That's number one. It's my job to help you analyze and teach you and whatnot. But if you want to be ran over by a Mack truck, then go do it.
Yeah. Yeah, there's opportunities in all kinds of different systems and strategies. There's no doubt about it. And 2019 is going to be a great year. It's going to be a great year for markets no matter what, because we love volatility. Matt, some of probably the worst markets for me.
Can I say one thing really quick?
Yeah.
When I say don't do the condor, that doesn't mean you can't do the bear call side of it. Mm-hmm. Right?
That's right. Okay.
If we have momentum to the downside, those bear calls are still really, really, really good. In fact, this retracement that we just talked about is a really, really, really good setup to issue a bear call, right? Just don't do the bull put side of it until we start to see momentum slow down.
Yeah. And obviously we're going to need to get some clarity.
There would be people that disagree with me on that, right? They would say you put it on every single month after month after month, and you learn how to hedge it, or you'll miss out on 10 straight months of great cash flow. So I understand that. But for me, I've seen the Russell do this too many times. And when I start to see volatility increase on the Russell, it's if I get a little cautious. I get a little, little cautious, I would say.
I would agree with all these things, and it's got to be up to the trader's discretion. You have to be good enough at something to be able to identify whether or not you should or shouldn't based on the conditions in front of you. Russell, make a comeback this year, you think?
If the market comes back, it'll come back strong.
It'll come back the strongest. And if the market stays weak, it may actually continue to perform very, very weak.
No, let me be very specific. If the market recovers, the Russell will do strong. If the market does not, the Russell will get its face kicked in. Kind of like, who did Mayweather fight last night? Some kickboxer out of Japan. Yeah. It lasted like 30 seconds.
Floyd?
Yeah, Floyd. A little expedition bout in Japan. Fought a 20-year-old kickboxer, real famous kickboxer out of Japan. Floyd flattened him in like 20, 30 seconds. Put him on the canvas 3 straight times. That's what the Russell will happen if the market keeps on capitulating.
Yeah.
Yeah. I wish I could have saw it, Brian. I wish I could have saw it because I get into that type of stuff. I like that type of stuff.
Interesting. I have not seen a fight in a long, long time. Not really my cup of tea, but c'est la vie. It is what it is. I don't know. I'm just not anyway, we could rant about that on a podcast. RTY, obviously in a bear retracement setup here, Matt. The problem with doing anything right now until you get a better signal and a trigger and confirmation, it's also on light volume. I'm pretty much going to be a broken record all day. I'm going to wait for Monday or Wednesday, right? First trading day of the year, get some volume coming in, get some institutional intent. The S&P is going to end the month down 9%, Matt. The worst, even worse, I think, than October. And we're looking at stocks precipitously dropping.
That's after the 7% snapback rally.
Mm-hmm. This is the biggest 1 month drop or 1 year drop since 2008. Obviously, the market had been going up for a long time.
Well, the worst year it had was, I think, a gain of 1.5%.
Yeah.
That was 2015.
Let's run through currencies and commodities next. Give me the dollar if you would. Actually, one of the currency pairs that grabbed my attention was that pound. A storyline in 2019 that is going to be major for markets, there's no question about it, is whether or not the UK can have a successful Brexit, Matt. I know that's going to be dominating headlines. It has for 3 years. I don't think it's going to stop anytime soon. The pound dollar broke out here. What's going on with the pound here?
Uh, Never confirmed. I mean, I love this trade coming back under the 1.26 level. It just never came to fruition. It's par for the course with the pound. If you trade the pound at all, it's the same headlines over and over.
Mm-hmm. Yeah. Yeah. That is the randomness of that currency pair. There's no doubt about it. Dollar index, though, is not really running. This one cross pair that was making a move.
Just down slightly today. Last I checked, it was at the 96.25 level. Let me find my dollar index. For some reason, I took it off. So DXY here. Okay. So yeah, it's kind of fading down after I looked at it before the halftime report, Tim. But that looks, I mean, if you close under that 1.16 level, you could call that a confirmation, perhaps. I still think it's 96, though. I think it's got to close under 96 to have a confirmation of a bearish downtrend.
You know, is the dollar fading because of the pressure on the Fed and the idea that maybe they're not going to raise as much next year? Has the sentiment changed, obviously, about the currency market?
Absolutely, 100%. I mean, let's look at the Fed in 2019 really quickly, because that's important to kind of in your predictions. And, you know, we have our prediction podcast coming up here in a few hours, Tim. And obviously the number one prediction we give is what is the S&P 500 going to do on a yearly basis. And it's so hard to predict because you don't know how the Fed's going to react. For most of December, we anticipated 3 interest rate hikes coming into 2019. With the Fed's recent action, we have downgraded that to 2 rate hikes. But Tim, most of the market doesn't think the Fed's going to hike at all. And so if the Fed goes from 3 hikes down to 2 hikes to now the market believing that the Fed's not going to act at all and they're just going to keep rates steady, then yeah, that's going to have a negative impact on the dollar because everybody expected more rate hikes. And the problem for the Fed is a couple different things. Number one, if they continue to raise rates, but the European, the Chinese, and the Asian areas and the Asian central banks don't raise rates, all of a sudden you're going to create this vacuum between the other major currencies. So that's a problem. I don't see the Fed cutting in 2019, but if they do start cutting, I think that's the worst case scenario for the market. I absolutely think it's the worst case scenario for the market if the Fed cuts rates.
You would have to have some real problems from an economics perspective for them to go to cuts. Yeah, I could see scenarios where that plays out. But
if they start cutting, that is the Fed telling you that a recession is coming.
Correct.
And the markets will capitulate on that. The Fed raising rates is not going to be good for it. So I think the best case scenario is the Fed standing still. I still think they're going to raise rates 1 or 2 times next year, though.
Yeah, I think that you've come off that 3 number, probably more like a 1 or a 2. And if they did that in the market, maybe the market actually just accepts that and embraces this slower movement back into normal monetary policy. It's going to be an interesting year for the Fed.
There's nothing normal about the Fed, and there's nothing normal about Fed monetary policy over the next 10 years either.
Yeah.
Tim, what the Fed did in 2008 fostered in a new environment from a monetary policy perspective. We don't know what is normal anymore.
It's true. I mean, we really don't know how they will respond to any future crises as well. You know, they've opened the door, Matt, from an economic philosophy perspective to making new and different changes that we've never seen before. And frankly, big institutions, that's going to
happen in the next market crash too, Tim. I think we're going to see new things that we haven't seen before.
Yep, I agree with that. Move on to crude oil, if you would. Let's go through all the different major commodities. Crude actually has been a little bit more volatile here today. It's on the flat line, $45 a barrel. Obviously, the number one commodity in the world, very, very bearish in a downtrend. Do you have ever so subtle hint of slowing momentum here, Matt, or is that just churn?
Yeah. No, I mean, it depends on how you want to equate this, okay? You got massive momentum here, slowing momentum here, and then momentum starts picking up again here. So in the trends, you know, momentum in this short-term trend, momentum is actually picking up to the downside. The slowing momentum was here, and then once it broke 50, you saw momentum pick up. I kind of feel like right now we're kind of seeing this type of scenario happening with crude, okay? Where you had the initial quick movement to the downside, found support fairly quickly at 50, and then did a little bit of a retracement back into the 20, but that rounding over just didn't give a lot of confidence, formed a little bit of a low base, and then the breakdown. You're starting to see a little bit of that here. I think that 20-day moving average is going to catch up to crude before we see any movements one way or the other.
Yeah.
i.e., I'm not looking to trade crude right now.
The trend is your friend. And so I'm obviously not looking to try to find a bottom in here. I know some traders are now starting to sell some naked puts on certain products, Matt. Just remember, the only thing I'll say about that is understand your risk. You got to be willing and able to take assignment if they do put that stock to you.
Okay, I said it on Monday, on Friday as well.
Yeah.
I understand selling naked puts on crude oil on USO if you're willing to take possession and hold for a very long time, right?
Yeah.
I understand that. I do not understand traders just looking to cash flow with naked puts on crude light right now.
Mm-hmm.
And I just that has not been a very successful mechanism over the last 3-4 months. It just hasn't. And I know you can go out in the futures market and you can sell a 3 delta with 15% downward cushion. If crude confirms on the downside and breaks 42, 15% is nothing to crude right now.
Mm-hmm.
Absolutely nothing. So no, I do not believe traders should be selling naked calls. First of all, I do not believe you should ever sell naked calls on any instrument whatsoever. But in terms of naked put, it is a great way to enter into a long-term investment. And as crude has went down as much as it has, if you're willing to take on the risk to the downside because you think it's going to foster a growth over the next 5-10 years, I have no problem with that. No problem in any capacity. I mean, what's the worst? Another 20 points down here on crude to $25, $27?
Yeah. That's
Really
a 40% haircut.
well, it's not.
With you.
I get that, but it's not a 40% haircut if I come to USO, right? So if I come to USO here, and let's say I can give me a 46-day contract down at 7.5.
Mm-hmm.
Capture 8 cents a contract. You're all the way down here at 7.5. 7.5, yeah, that'd be another 20% down. So on crude, you're talking the equivalent of that on crude light would be 34.
Yeah.
34 contract. Crude could get to 34 easy in the next month.
I agree. One of the hard things about forecasting crude for 2019, and I know we are, and I was doing some prep for our podcast here in a couple hours, try to make a prediction, Matt. In the short term is bearish, but you could easily see a $10 drop over the first quarter and then find a bottom, then rally just like it did last year. You have extreme volatility potential in the commodity. There's no doubt.
My whole point is this. Crude could absolutely get to 34 to 36 in the next month, correct?
Correct. Mm-hmm.
Okay, so don't sell a naked put on crude oil, but if you're willing to take possession at 7.5 on USO because you think it's a wonderful investment long term, I don't have a problem with that.
Yeah, I'm with you.
Those are two completely different trades.
Different philosophies for sure. There is no economic data, obviously, today being the 31st, nothing tomorrow either. Markets are closed, but the Forex markets are open. An interesting question coming from Blake.
Question. Yeah, Blake, Forex, obviously, like any other tradable instrument, is going to be impacted by bearish conditions. Typically speaking, it will behave very similar to the stock market in the fact that safety is a concern, right? And when bear markets go down, what do we look for? We look for Coca-Cola, we look for Walmart, we look for Kroger, we look for utility companies, we look for healthcare companies, we look for US bonds, we look for treasuries, we look for these safe haven classes. And so when you're talking about the currency market, you have safety in certain currencies just the same way you have growth in certain currencies. Currencies like the dollar, currencies like the Japanese yen, and currencies like the Swiss franc have a safe haven status to those currencies. And so those currencies typically don't get beat up in a bearish condition, unlike, say, your growth-based currencies like your emerging market currencies and so on and so forth. So yes, you have a lot of the same overall dynamics in the currency market that you have in other markets as well.
Give me FXI real quick, if you would. Just got a quick question for you. In terms of Forex and currency and all these different markets, obviously international markets are going to be open, sooner than later because they open up first on the first day of the year. I've seen China go, and lead the U.S. market as we open up New Year's. Simple question, Matt. For 2019, if you had to buy one, FXI or SPY, same capital, who do you think outperforms, the U.S. or China?
Oh, if you give me any country of origin versus the U.S. over the last 20 years, I'm picking the U.S. and I'm going to continue to do that.
Yeah. U.S. market obviously has a little bit more stability. It's a little bit safer call there. I'm wondering if this is
Don't
the
get me
year
wrong.
when,
There will be times when FXI will outperform SPY. There's no doubt about that. And you can take positions there. But at no point will I ever take a country's market over the US market. The US market is the best, most liquid, and greatest market that has ever existed in human history.
yeah. Yeah. Trump over the weekend was talking about some of the progress on the trade deal. Obviously, that's going to be another theme that is not going away
Sending a
in
delegation.
2019.
Yeah, it was quick, but I believe there's a delegation going to China next week, I want to say.
Yeah, for sure. Let's go through all the sectors real quick. Just a quick rapid fire through the XLs, if you would. Start with discretionary. And as a matter of fact, Matt, is that a year chart right there?
Yeah, it's 1 year today.
Now, I don't know if I think it's the same designation, but I'm looking at my perf charts, and the discretionary sector is attempting to end the year in the green, literally by 0.5%.
I think the number's around 99.
Yep.
You're at 99.13 right now. Come on, discretionary, still green. Come on.
It may be one of the only sectors that actually ends up in the green.
And I look forward to shorting it on Wednesday as it pivots off 100.
Beautiful bear retracement setup. Discretionary, obviously pretty weak. Communication services is a new sector, Matt. Give me the XLC if you would. One of the most bearish. Lost 5% since its inception here just in June.
Yeah, bad timing on this, whoever created this ETF. But it's been bearish since its inception in July. Bearish retracement 42 is obviously resistance. Resistance here. You're attempting confirmation today. These are all your stocks like Google, Facebook, Twitter. All those communication type companies.
Mm-hmm.
It's one of the worst performing sectors since its inception, and I like this bearish retracement here.
I do as well. Tech. Give me tech next. XLK.
We've already talked about the NASDAQ.
C'est la vie, man. I mean, it's the same thing. Industrials.
Same thing. Obvious resistance at 65.
Materials.
Ooh, pivot under 50 is confirmation, brother.
Yeah. The industrial sector lost 14% this year. Materials were one of the worst performers, second worst. They're down 15.5% this year. That's a beautiful bear retracement.
Materials has your energy companies, right? Your drillers in there. It has your gold miners in there, silver miners. You got your copper miners. You got your titanium. You got your, and then obviously you have your steel companies there too. All of them had fairly difficult years in 2018. Yeah. And one of the reasons is we never got the infrastructure bill coming into place, T. We were that was one of the most surprising political things I did not see in 2018 that I'm really kind of surprised at. The tax plan coming into late 17, that obviously got passed. And I thought that they were going to pivot to infrastructure because that corporate tax plan that was passed in 17 was hotly debated. And in typical politics, in a typical political environment, after something like that, you usually go to your counterparts who just got their teeth kicked in, and you try to bring them back to the fold by doing something that is a win-win for everybody, and that's infrastructure. Everybody will support infrastructure, but we just didn't get it in 2018. Obviously, with the whole, standoff between Democrats and Republicans that's getting more ridiculous by the day. But that was surprising to me, and because of that, this industry, this sector, kind of got hurt by that.
Yeah, it definitely has had a bad year. Energy actually was even worse. XLE was down an extra couple percent on that, and those are your oil companies, like you're talking about, and same basic theme, but really nasty movements.
Yeah, materials and energy like to run together.
Pretty close, yeah.
Well, I mean, you could take some of the stocks in materials and easily place them in the energy sector and be perfectly fine.
Well, one of these days we should do one of these halftime reports on sector rotation, because the sectors we just looked at, energy, materials, industrials, tech, communication.
There's no rotation into those. They're all
no. But they're the aggressive sectors. That tells you something, right? Yeah, well, for sure.
I'll put finance in there too, T. I think finance is quickly becoming aggressive.
Yeah. It's a tough call because some of them are, some of them aren't. You still got the insurance providers and things like that.
Those banks are ultra aggressive.
The
banks are almost like trading biotech companies now. The bank in the 80s and 90s, Tim, was like trading utility companies. I mean, speaking of utility companies, see the news over the weekend?
On PCG?
PCG?
No, I saw you tweeting about it. What happened?
If they are found liable for starting those fires, there is possible murder charges. Like seriously, I was shocked by it when I saw that. But anywhere from misdemeanors to Class A felonies that they're faced with, this is a company you cannot touch.
No, not at all. I mean, there's no doubt. When you hit news like that, you just got to remove it from your watch list and start focusing on other companies. Yeah, let's go through the defensive sectors real quick. Staples, healthcare. You've got PCG up here. Why don't we start with utilities? Utilities was one of the only sectors of the year to actually end up in the green. It'll be up just by a little bit, 3% for the year to date.
Yeah, I was going to say that's not that green.
No, just barely. The other sector that was in the green, though, is healthcare. Healthcare did have the best year of all sectors on the S&P. And again, not that green, just kind of happens. 2%? Well, heck, it would have been in the red last week for the year. So this week moved it from red to green to end the year. Financials were ugly this year. Brokers, banks, a lot of them got beat up. Goldman Sachs, so many different companies. Morgan Stanley, JP Morgan.
Better company in Goldman Sachs, though.
I know you love it. Staples also were down on the year 8%, which is surprising. Usually they do hold up a little bit better. They have not, as a matter of fact. They did for a bit. We thought that there were some good opportunities there, but
they got took it on the chin real hard, though, in that Chinese trade talk earlier this year. They tried to recover, and they were one of the better performing ones, more consistent ones throughout the summer and early fall. And then they just got absolutely smacked in December.
Yeah, I agree. It was holding up nice. There was a lot of companies even setting up for tradable opportunities. And then when that bottom fell out, it literally just completely fell out, moved that whole sector into the red. And then the last one, Matt, that we track every week on the scoreboard and the newsletter is the real estate sector, XLRE. The REITs had held up a little bit better. They've now fallen out of favor as well. The month of December, really, as you look at the different sectors, Matt, one of the themes is that you saw aggressive selling in what is traditionally a defensive type of sector.
They all did it.
Yeah,
they all did it. There was no safety, but that's also pretty normal, Tim. When fear starts to spark, initially it's the sell of everything, and then it's okay. What should we re-pick back up?
Mm-hmm.
Right? Okay, where should we reposition ourselves? And so initially you saw a sell of everything. I think it was an overreaction, and I think the market's going to come into 2019, try to reassess coming out of the nasty December of 2018. I think they're going to try to reassess. Now we'll see where this market goes. We'll give our predictions later on today in the podcast, but I'm going to tell you right now, over the next couple weeks, if we do confirm on the market, and what I mean confirm, I mean that bearish retracement. I've been very conservative with Delta trades over the course of the last month. I'm going to be conservative because I'm always conservative as a trader, but that's not what I'm going to miss.
Mm-hmm. Yeah, pull the trigger for sure. There will be opportunities as we keep moving forward. There's no doubt in my mind. As I look at everything happen across the market, Matt, it's fascinating. There's so much going on. Yeah. And by the way, all those themes will still be true on Wednesday. So it is. It's funny how the market is. We're going to continue to talk about Brexit and the trade wars and the Fed. Are there anything that's really out there that's unforeseen that you haven't, really identified, or that we haven't talked about?
I think Deutsche Bank said it all in their assessment of the economic impacts that could hurt the market. I think there was 30 different line items.
Yeah.
And the one I said that Deutsche Bank missed was putting your own crappy company on that list.
Oh, hey,
the big ones are Brexit, obviously. Okay. And I'm not sure we will have a Brexit, to be perfectly honest with you, but that is the big issue, is obviously Brexit. The first quarter earnings coming out in a couple weeks, starting earnings season. Definitely be with us here in earnings season as we evaluate those earnings and what's happening. And obviously there's a lot of hints we can always get in earnings season. So you got your first quarter earnings season coming up, and you got the Chinese deal, right? You got the Chinese deal with America and those ongoing trade negotiations. That's obviously a major deal in the first quarter. And then you have the European debt crisis. So, when you couple, I forgot the slowing growth in Europe and China as well as a potential concern. But Yeah, the market's going to have a lot to deal with in 2019. But Tim, we're going to be here every day for it.
Well, and remember, guys, you don't have to predict what's going to happen in 2020 and 2021. You got to trade your account every day and just follow your rules. You know, Matt, because we have some fun prognosticating.
We're going to have fun making our predictions, but Tim, my prediction is this: if the market confirms on Wednesday, I'm going to short some stock.
That's right. If it goes up, I'm not, you know, and I'm going to trade it day by day and continue to focus on opportunities. Couple of charts I want to finish on here, gold and silver. And Matt, I know one big thing that's going to be happening at Tackle Trading some point in the first quarter is we're going to be releasing a new system called Personal Gold, you know, and we're working on that on the back end as soon as we kind of get the Tackle
25. Yeah. We got to Tackle 25's got to get to market. And like I said last week, guys, another substantial change we are making to the Tackle 25 is the video educational system off that Tackle 25 as well. I think we've cut 6 out of the 7 modules so far, as well as the intro. So that will be live to our pro members. And for all pro members starting tomorrow, if you are a pro member at Tackle Trading, you will be grandfathered into that Tackle 25 system. For those that are not pro members, go over there. We're running a holiday special. You can just go over there to the store at tackletrading.com and you can sign up to become a pro member, because after tomorrow, that will no longer be grandfathered in. People will have to pay for that course.
Yeah.
It's a good one.
Yeah. I'm excited for it. Well, and I'm excited just to kind of shape and help our community and our traders and our halftime crew on a day-by-day, month-by-month basis, Matt. You know, the end of the year always brings reflection. I'm very proud of what we've done in 2018. But frankly, we got big things planned, you know, and we've got a big year in front of us that we're going to be bringing here each and every day and each and every week. And those mastermind groups is a way to help apply and learn how to use the mechanics from those systems as well.
Well, I'll tell you, the systems are one thing, learning all the rules and understanding how to do it, but it's not just the systems. Those mastermind groups, to be able to evaluate those systems in real time are vital. They are absolutely vital. They're great too. They're fun too.
I agree. They are a lot of fun. And, you know, one other big challenge, guys, just focus on building your system, building your rules. Do it with us each and every day. Develop your edge. Continue to show up each and every day in the market. And there's always opportunity, Matt. You know, whether it's in naked puts or in Forex or in the commodity market, every trader has to find their edge.
For all the pro members watching Tackle Trading's halftime report, I just grandfathered you into an amazing system. Where's the likes? Come on. What are we doing here, guys?
Yeah.
Come on. Let me see those likes go up.
Cody, let me ask Cody a question.
I'm pandering for likes on YouTube. It's so 2018.
I love it.
What's up?
Do you think the most used phrase by Matt this year on the halftime report is, "What are we doing here?" It's like
that is a good one.
It doesn't come close. C'est la vie.
C'est la vie.
That or better than.
Oh,
how are you doing today, Matt? Better than.
Oh, it's always better than. It's always better than something, right?
Better than tech, yeah.
I'm better than I'm better than Drew Powell.
Absolutely fantastic.
Yeah, that's a good one. But Tim's,
Yeah, he does do a lot.
Don't get me started on Tim's. Okay, I've just edited 3 hours of Tim.
Okay. By the way, the one commodity we didn't talk about today, it apparently is cold outside. Natural gas was down 7%.
You know what, Tim? It was way cold outside, but the sun is up, right? The sun is up, and you know, it's just natural gas down again. This thing can't be touched yet. It just can't. Just wait for it to slow down, get back to some normalcy.
I've called it untradeable for a while, and so have you. And it's like, until you get normalcy, I love that word. Who originally came up with that word? Was that a Teddy Roosevelt thing or Woodrow Wilson?
I don't know. I was thinking of Jonathan's comment. The VIX is broken has to count as a phrase from Matt too in 2018. That was up there.
That's up there as well.
Tim, the VIX is broken. It's completely broken. It's been broken for 10 years. What are we doing?
I read an article. I almost sent it to you. I didn't want to trigger a rant, but I read an article by a CMT who was talking about VIX.
Oh God, it's already triggered.
Probability. No. It's New Year's. Yeah. Happy New Year, halftime crew.
We're putting a stop loss on this conversation right there. But halftime crew, thanks for staying with us in 2018. Pro members of Tackle Trading, you guys are absolutely the best.
One quick one, Matt. I just want to do this. Cody, great job this year, kid.
Yeah.
You know, if you guys are out there in your halftime crew and you come enjoy the show every day, I think Cody needs a big applause, a big thank you. He puts a lot of work in on the back end, you know, helping us out, get prepped and whatnot.
Well, you know, Tim, you and I get to show up 15 minutes in front of the report, and Cody does all of our back end, and we just get to do the hard part. We get to talk there. Cody just gets to make sure we say the right thing.
Yeah, it's a hard part for the Justice Brothers is talking.
No, Cody, you've made this halftime report better and better and better. So thank you for Cody. But the amount of thanks I have for people in 2018, the list is extremely long, but it starts with the halftime crew. It starts with our community. I've said this from the inception of Tackle Trading. We are nothing without our community. And I hope you guys see that from us on a daily basis, bringing it to you with those reports, the shows, the lounges, the Coaches Show, Cash Flow Club, you know, all those mastermind groups, mind of a trader. You guys are the absolute best. And I'm going to tell you guys right now, we're going to bring it every single day. You be with us. We're going to walk you through this market. I don't care if it's bullish, bearish, or neutral. We're going to come here and we're going to do our job as traders.
Yeah. C'est la vie. All right. Have a good, happy, and safe new year out there, guys. If you are doing anything besides what Matt and I will do, which is kind of be lazy and homebodies with our family, you know, be safe out there on the road. You know, it's a dangerous night for sure. We will see everybody back here on Wednesday and get in the game, guys. Peace out.
Peace out, everybody.